What's up, you guys? It's Henry. Slightly different format today. I'm filming this in the evening because Apple just announced a 4-to-1 stock split. And on my Insta right here, I got a few messages from people asking, should I buy Apple? Basically, a 4-to-1 split means if you have one share of Apple, you will now be given 3 additional shares. Similarly, if Apple is $400, it will now be worth $100. Wow, Apple is going to be $100? That's stupid cheap. Wrong. This is literally the biggest misconception amongst beginning investors, and I can totally see why people might think a lower price means a cheaper stock. Here's what I'm going to discuss in this video. What is a stock split? Why stocks have splits? Financially, is a stock split good or bad? And last, should you buy Apple? Are you ready for me to hit you with some straight facts? By the way, I got a new microphone. I am super excited about this thing, and this baby cost me $700, so hopefully this audio is gonna be way better than what it used to be. Okay, a stock split is when the number of shares gets cut or divided into more pieces. In the case of Apple, a share will go from 400 to 100, but there will be 4 times more shares. And basically, stock splits happen so more investors can comfortably trade the stock. Now, the company isn't just being generous because they like you. They do this because it increases liquidity. Henry, that sounds like a fancy term. What the empty coconut water and a 3 bananas, where's my bananas? There's my 3 bananas. Is that? What does that mean? And let me just put this stuff over here. I ordered props, so these are my current props for now. Liquidity is when there is a lot of volume. Let me ask you, is it easier to sell a Lamborghini or a Toyota? Well, you can sell a lot more Toyotas because the masses of people can easily afford a Toyota. But how many people can realistically afford a Lamborghini? Well, I think if you subscribe and watch my videos, you're on your way to Lambo status, and it's just a matter of time. So what I was trying to paint in that example is volume means that things are easier to buy and sell, and that benefits investors, companies, and options traders. Apple has some of the best and juiciest options to trade. Let me know if you guys want me to sell a put on Apple on Monday and show you a live trade just like I did for NIO. Okay, so now you know why stocks have a split, but is it a good thing or a bad thing? For that, I have to talk about pie. Imagine a warm apple pie. And before I go over this example, if I do a good job explaining this really simply, then just smash the like button for the YouTube algorithm. That's pretty much all I ask for. Okay, imagine a big pie. Now I cut the pie in half. Is the pie bigger? No. Imagine I cut those halves in half again. Is it bigger? No. That's exactly what is happening with Apple. It's worth $1.7 trillion. And even if they have a stock split 4-to-1, it doesn't mean anything. Just like cutting that pie in half and in half again didn't make the pie any larger. But a lot of people get super excited and think the value has changed. No, don't be fooled by Wall Street. Now, I know I just said the value has not changed, but I'm about to contradict myself and tell you why it might. The stock market has something called anomalies. An anomaly is something that is not normal or unexpected. And every time there is a stock split, especially for a stock like Apple, a lot of retail investors have the misconception that the price is a bargain. So they end up buying the stock and driving the price higher. I think the most common thought people have is something like this. Well, Apple was 400 and now it's 100. Shoot, that's stupid cheap. Let me buy myself, my lady friend, and my dog some shares of Apple. So I'm pretty confident that's probably what is going to happen tomorrow, and I can already see during after hours, as I record this video, the stock is spiking higher. So to answer many questions, no, the financials have not changed, and a stock split really doesn't mean anything. Now, I'm going to wrap up and discuss Apple's business as a whole, and if it is generally a good stock to buy. And let me first just say, they had a blowout quarter with sales up 11% despite all the virus stuff. But they also confirmed that the iPhone 12 will have a delay. So let me help you digest these pieces of information so you can make better and more informed decisions. Let's start with Q3 breakdown. iPhone had 26.4 billion, while the consensus was 22.2 billion. That's a big beat. iPad 6.6 billion, while the consensus was just 4.8 billion. Dang, son. Mac 7.1 billion, while consensus was 6 billion. And wearable and home and accessory was $6.5 billion. Services were pretty much the only thing that didn't really blow out this quarter. So I think I just have to say that this stock not only is exceeding a lot of my expectations and other people's expectations, but is also a really good dividend growth story. During the past 12 months, Apple's average dividend per share growth rate was 5.5% per year. And during the past 3 years, the average dividend per share growth rate was 11.2% per year. So Apple has been slowing down in dividend growth, but for a stock with such amazing returns, it's great that they pay a dividend that has been increasing. I think Apple has such a strong brand and a loyal following that they can release an iPhone with barely any improvements and still sell out of the thing really easily. That's part of the reason that year to date, the stock is up about 30%. Apple's business is highly seasonal, and I'm surprised to see them do this well, and it's not even holiday time. Here's a 4-year chart which shows you how seasonal the business actually is. But to be honest, most of the businesses are seasonal unless you're a Coke or a big consumer company that just sells essential products like toothpaste. Anyway, I'm going to conclude by saying Apple is most likely going to rise in the short term and is likely to be a strong holding for the long term as well. They definitely have more cash than they know what to do with right now, so really expect the dividend to continue increasing and flooding your pockets with cash. All right, and speaking about cash, I want to show you guys a really cool example of how you can calculate what the future dividend will look like and how much money you will make off of dividends going into the future. So I'm looking at Apple stock, and the current dividend is 82 cents from the company's website. Now, we know that the growth rate is 11.2% for 5 years and 5.5% for 1 year. So I'm actually going to calculate the dividend, what it's going to be exactly in 5 years. So I'm actually going to do this based on 2 different scenarios. Scenario 1, we're going to calculate how much this dividend will be based on a 5.5% growth rate. And then scenario 2, we're going to calculate how much the dividend will be based on this rate. Okay, so I'm going to make it really simple. So this is how you use Excel. This is what I did on Wall Street. It is actually not as hard as you think. So I'm going to walk you through step by step, and this is called a future valuation. So it's really simple. If you open up Excel, you type in equals, and then you put in FV, and FV, as you can see right here, it says returns the future value of an investment. So that's what we're going to be doing. We want to know what the future value of the dividend will look like. All right, so you do a parentheses, and for rate, we're going to look at this rate. So I'm going to click this right here. Boom, nice and easy, comma, number of periods. So for number of periods, I'm going to put 5 years because we want to calculate 5 years from today. PMT, it means payment. And that just means, are you putting money in each month? Now, you can put something for this if you want to, if you're going to be adding to your stock portfolio. I can show this in a different video. But for this example, no, we do not have any PMT, comma, and the present value. The present value means what is it today? And today, it is 82 cents. So I'm going to close this out, and I'm going to press equal. And there we go. We have $1.07 in 5 years. So that is what Apple will be paying in 5 years. Now we're going to do the same exact thing, but we're going to do it for this 11.2% rate. Okay, and I was just checking if I used this. So if you click into that formula, it'll show you exactly what you did. So guys, one more time, equals FV, parentheses, for rate, we're now going to use 11.2. So that is what Apple grew within the past 5 years. That's a little bit more aggressive, but I do think it's still possible. I do think Apple can easily grow their dividend at that rate if they wanted to. Like I mentioned, they have a bunch of cash on their balance sheet. So comma, number of periods, we're going to do 5. And for PMT, 0 again. And for present value, we're going to put 82 cents. Close that bad boy out, equals. All right, so as you can see, within 5 years, instead of getting paid 82 cents per quarter, you're going to be making $1.07 or $1.39. Now, let's take a look what that would mean if you had 100 shares. So if you had 100 shares, you currently get paid 100 times 82 cents or $82. So that's not bad. That's a really nice lunch. And now we're going to do 100 times 1.07, and then I'm going to just do times -1, just because this rate right here is negative. So equals $107. Not too bad. That's a pretty decent growth rate. And let's do the same thing, I guess, for the higher end of things. 100 times 1.39 times -1. So that's how much you will be making quarterly. Quarterly in 5 years, quarterly, and then copy paste. All right, guys, and real quick, I also did a year-by-year comparison of how much money you would make if you started year 0 right now with 82 cents and you wanted to retire within 15 years. Let's say you're 25 years old. By the time you're 40, this is what the Apple dividend progression will look like. You start with 82 cents, and right here, I multiplied the 82 cents by 100 shares times 4, because there are 4 quarters in a year. So there we go. This is how much money you make yearly on Apple right now if you had 100 shares. And this is the progression. This is what it's gonna look like if you keep holding your 100 shares. It's gonna continue to increase because the dividend continues to increase by about 11.2%. So yeah, guys, you start with 82 cents, and then in 15 years, you make $4. That is quintuple. Haven't used that word for a while. So yeah, there you go. If you ever want to calculate how much dividends you're going to be getting paid in the future, if you want to calculate your retirement, this is how I look at it. This is how I do things. And if you guys like steady cash flow and a lot of growth aspects, then this stock is a good buy for you. But I'm not a financial advisor, and I'm simply giving you my thoughts and opinions. I hope you guys got a tremendous amount of value from this video and appreciate me shooting this really last minute, because I think it could really make a difference for a lot of my YouTube family members. I guess this is my favorite part of the video. I'll see you guys more this weekend because I'm dedicated to building everyone's financial education and knowledge. Fist bump.
No one ever sees me.